For most people in the Big Four, their careers are a really important part of their lives, and they've spent a lot of time preparing for a successful career in finance by working hard at university and working hard in school. And it's really important to spend a bit of time also understanding what are the career opportunities after you leave the Big Four as well. The opportunities not only in the short term, but in the long term as well. I've seen a lot of people not spend enough time thinking about what their career options are after the Big Four, and they normally just end up choosing the first or the second job that's been offered to them. And they end up usually regretting it down the line. So it's really important that you spend the time thinking and planning out your career moves. In this video, I'm going to break down the exit opportunities for people leaving the Big Four. You might be thinking about joining one of the Big Four firms and really trying to understand what the career path looks like, or you might already be at one of the Big Four firms and thinking about what your next step could be. Towards the end of the video, I'm going to talk about one of the key things that you need to keep in mind when thinking about which job to take once you've decided that you want to leave the Big Four. Let's get into it. The junior staff that have been at the Big Four for less than 5 years have quite a few different options to go for if they do decide to leave the Big Four. One thing to point out straight away is that the people that qualify as chartered accountants, which most of the new entrants are put through, and which generally takes around 2 or 3 years, these people have a lot more opportunities and options open in front of them. This qualification is an indicator to employers that you've got the necessary technical skills, so that opens up a lot more opportunities for you. The salary you can command after you qualify as a chartered accountant increases significantly as well. So the most common career move at this level is for people to move across to industry jobs, and the 3 most common categories of industry jobs are internal audit, financial reporting, and commercial or analytical roles. Probably the most common career move for junior auditors is moving into financial reporting roles within the company. And this is because they've got a good understanding by this stage of how companies operate, how finance departments function in a company, and how financial statements are constructed. Associates transition to become accountants within a company, helping the company to manage its finances on a day-to-day basis. There can also be month-end responsibilities such as reporting on the financial position of the business. Another role within a company, which is quite a smooth transition, is moving towards an internal audit role. These roles involve assessing a business's risk and putting in place controls or testing the controls already in place. There is a slight advisory angle to this role because you're putting in front of management suggestions on how the current controls can be improved or what controls need to be put in place. But these suggestions are normally made by senior people in the internal audit team. So the most sought after roles within the company are the more commercial roles. So this is FP&A, business partnering, budgeting, pricing, etc. In these roles, you're doing much more analysis of the numbers, identifying trends, performing variance analysis, etc. And you're really helping the company move forwards and helping in the decision-making process for the business. Given these roles are so sought after, it can be incredibly challenging to get one of these commercial roles directly from audit. If you think about it, there are hundreds, if not thousands, of auditors from all across the Big Four looking to make an exit after they qualify as a chartered accountant. So they're all looking to land one of these commercial roles, but there just aren't those many commercial roles in a company compared to financial reporting roles. That's why they're so competitive to get into. You also need to keep in mind that most of these commercial roles are only found in large companies because small and medium-sized companies only have financial reporting roles. One common thing that all recently qualified accountants experience is job recruiters approaching them with opportunities directly. Now, some people at the Big Four do use those approaches to make an exit from the firms, and some people just apply for jobs that they've seen a posting for. But there are a few individuals that join one of the clients that they've been working on. From a client's perspective, they know the individual, they know that they're competent when it comes to the technical skills, and they also understand how the business operates and how the financial systems work. It makes a lot of sense for them to just poach you from the Big Four instead of starting an entire new recruitment process and trying to find someone externally. Other roles open to junior auditors include project finance, treasury roles, and technical accounting. Now, there are plenty of other career options open to you after leaving the Big Four as a junior auditor. Now, there are a few auditors who made successful transitions into corporate finance roles. So these are mid-market investment banks, private equity, small and medium-sized asset management firms. It's a really interesting career move, and I won't go into too many details here. I'll make a different video on the topic covering exactly what career moves they made and how you can make a career move similar to theirs if you wanted to. Remember to subscribe to the channel so you don't miss out on that one. Similar to junior auditors, a very common move is to transition into industry jobs, and there's the same categories of roles available to managers and senior managers as well. Moving into financial reporting and internal audit roles are very common, and naturally you'll move into more senior roles given the years of experience you've got under your belt. And it's also not uncommon to see people at this level get financial controller jobs at small and medium-sized companies. This is where they're responsible for the entire accounts department and for preparing financial statements along with other responsibilities as well. In some companies, this is a senior-most finance role, so there's a lot of responsibility that comes along with this. In general, commercial roles are less widely available the longer you stay at the Big Four. This is because you start to develop specialized audit skills and experience which rule you out for commercial roles. In the job market, there'll be candidates building up those commercial skills and commercial experience, which will be much more applicable to those commercial roles. Some senior managers with plenty of years of experience under the belt also move into CFO roles for medium and large-sized companies. Audit partners generally take two roads after they're finished with their Big Four careers. One of these is naturally retiring or taking a long sabbatical from their careers. The other option is to move to a board-level position in the company. They usually take up the CFO role in large companies, listed and unlisted, and some of them even take up non-exec roles. As a junior employee at the Big Four specializing in tax, you still have a large amount of options open to you. Similar to audit, you get a lot more options once you qualify as a chartered accountant, a qualification that most new entrants in tax undertake. Sticking to tax-related roles first, a common transition is to become a tax accountant or a tax consultant within a company. Naturally, the experience that you've gained at the Big Four working in tax will be applicable to the role in industry, and working for a large company, you can get the chance to specialize in a particular field of tax, for example, domestic tax, international tax, or transfer pricing. Individuals that want to leave tax behind also have the best chance to do that at the start of their careers. Leaving Big Four tax and moving into a non-tax role within a company is really challenging, but I've seen it done before. A much easier transition is to move to industry in a tax role, for example, a tax accountant, and then move within the company to a more commercial role. Finding a non-tax role which you're interested in might take a bit of time and will take a bit of luck, but in most cases it's always easier to make a career move within a company than to make a jump in career fields from one company to another. A lot of them are poached by clients that they work on because they've got a good understanding of the company's tax affairs, so it makes a lot of sense for these companies to go and hire them directly. Another move that I've seen experienced tax professionals make is to go and work for the HMRC. Working for that entity, you're providing guidance on current and new regulations. As I said before, the best time to move out of tax, if you want to, is at the early stages of your career. There are some managers at the Big Four who move away from tax, but this normally comes at expense, for example, working at a much smaller firm in comparison to the Big Four. Similar to audit, a lot of partners decide to retire after their stint with the Big Four. Those that do carry on working will either go and work within a company, so taking up senior roles in the tax department, and in most cases leading these departments. Some even decide to set up their own tax consultancies, either working by themselves or taking a few of their staff from their old Big Four team. When looking at exit opportunities for Big Four consulting employees, it's really important to first state that all of them will face different exit options based on which subdivision they sit under. Consulting is a very broad category which encompasses providing advice on strategy, IT, operations, risk, transactions, and various other topics. Individuals within these sub-departments have different exit options based on their particular focuses. Within each sub-department, you've got various different teams with their own different remits, and exit options vary according to these sub-teams as well. In this video, I'll cover the exit opportunities for people working in the transactions field, the area I work in. Within transactions, you've got teams that provide M&A advice, due diligence services, valuations, and post-transaction support. Unlike audit and tax, not all new consultants joining the consulting division get put through the accountancy qualification. For those that don't go through the accounting training, the exit opportunities only start to increase once you get deal experience. A fair amount of individuals with deal experience across the transactions teams end up working at investment banks, boutique investment banks, starting from the bottom as analysts. Those working in the M&A team also move across to middle market private equity firms. They do this after they've gained 4 or 5 years of experience and have got a good amount of deals under their belt. Another possible move after some deal experience is to move to the other side of the table and work in corporate development. Corporate development is just the in-house M&A team within a company. They're responsible for making acquisitions and disposals for that company specifically. And the role involves similar tasks to what you'd do at a Big Four deal advisory firm, for example, target scanning, valuation analysis, etc. In terms of opportunities, the only difference for those who gain the accountancy qualification is that they've got even more options once they decide to leave the Big Four. Aside from the deal-associated roles such as investment banking and private equity, they're also strong candidates for the more commercial roles within industry, for example, FP&A. By the time you've reached these levels, you've completed a number of deals and have led many of them as well. In terms of exit opportunities, they're very similar to junior staff members, but naturally you'll be going into more senior roles in investment banks and private equity firms. In one sense, you'll be performing very similar roles, which is managing transactions through to completion. But in private equity specifically, you'll also have to manage the companies in the PE firm's portfolio. So you may sit on the board of some of these portfolio companies, helping them to make strategic decisions and making sure that your private equity firm's interests are aligned and kept in mind by the management. Roles within corporate development are also available for managers and senior managers, but so are other senior commercial roles within the company. Similar to audit and tax, a lot of individuals make being a Big Four partner their final role in their career. Those who continue to work normally take up board-level positions within a company, generally taking up the CFO role with a more strategic focus. Some also take non-executive positions on the board. Finally, another exit option is to set up your own M&A shop. With all those years of experience under your belt, you've generally built up a credible name for yourself in the industry, and you've got a good list of previous clients that are willing to give you business. It's also common to see 2 or more partners teaming together and leaving the Big Four at the same time to create a new M&A advisory firm. When this does happen, they also try and take quite a few of their staff from the previous Big Four firm. So that was a quick roundup of the exit opportunities for Big Four staff, but it's something really important that you need to keep in mind when choosing what career option to go for after you decide to leave the Big Four. And that one thing you want to think about is what is the final destination for your career and what skills do you need to pick up to finally get to that position. So let's look at an example. Let's say you're an auditor currently at a Big Four, but you wanted to work as a CFO eventually one day. As I said before, a lot of auditors want these commercial roles within companies, but you really have to understand that working in financial reporting for a company does have a lot of value in the longer term. This is because CFOs don't only need commercial skills, but they also need to have a good understanding of financial reporting, because this is one of their key responsibilities as a CFO. If as an auditor today you move into a financial reporting role within a company, you'll build up really important skills and understanding of how different accounting systems work and how everything ties together to create the financial statements for a company. So as you progress through the firm, you really have a good solid foundation to build on. People know that you've got that working knowledge of financial reporting, which is really going to help you when doing the job of a CFO. I really hope you found that video useful, and if you want to learn more about certain finance roles which I spoke about in this video, click on the video on your screen right now, and remember to subscribe to this channel to learn more about finance careers, especially Big Four careers.